Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Great to have you with us. Alex, Eva, Costa with you. Broker Daily Uncut. Here we are on the hand down the budget, hours away. It's been flagged as being one of the most consequential in decades, potentially. Mm-hmm. So a big day, guys.
It is. I was actually saying to Eva this morning, it's probably the first time ever that I'm actually going to watch a budget. So, there's plenty going on.
Yeah, there's a lot. And we've been on it, like with clients for quite a few weeks now. There's a lot of people still trying to squeeze in last minute in case everything takes effect from tonight. And that's sort of what we've been hearing lately. Yeah. Latest news says, once it's happening, it's happening.
It kicks in.
I think, the government has effectively leaked out bits and pieces just to prepare Australia for what's coming down. It's a incredibly difficult job that government has to do to balance the needs of all Australians. There'll be winners and losers, as there always are. It'll be a much talked about budget, and it won't end, today or tomorrow. It'll carry on for a long time, and I think there'll be probably lasting ramifications. Whether it's the right way to go or not remains to be seen. But Costa, you were sort of quoting some historical evidence of budget tinkering. Before we jumped on air.
1985, under Paul Keating as Treasurer, he actually got rid of negative gearing. And what happened for the following 2 years was obviously investor activity slowed, which was understandable. Vacancy rates got really tight and rent increased sharply. Now, people that support the policy were arguing that the rent rises were mainly due to low housing supply, which we currently have, and strong population growth, which we currently have. So it's basically a carbon copy of what was going on in 1985. 2 years later, in 1987, he scrapped it and just went back to what it is today. So if you're going to go on historical data, they did remove it. They saw the damage that it did do, and then they just scrapped it because it was affecting too many people. Now, how that's going to play out in this day and age, I would probably say will be very similar. Obviously, we've got, I actually think, a much bigger housing supply problem, and the population growth is just skyrocketing at the moment in Australia. So
let's see. Well, obviously they didn't have the, I guess, redirection of, buy new properties or house and end package or these sort of things. But I guess the issue we have is those aren't widely available either.
Yeah, well, builders and developers are actually struggling to get projects over the line, and I don't think it's because of there's not enough investor activity or not enough people want properties. They all want properties. But the issue remains the same, where the red tape and the cost to build these properties and these apartment blocks and these estates, they're just skyrocketing. And at the moment, with the fuel crisis, there's that many building materials that have petroleum in it that those components to build are just skyrocketing. Like plumbing, I was reading the other day, up 30%. There's a lot of plumbing in houses, a lot of plumbing in apartment blocks. And that 30%, it's going to be pushed over to the client, to the purchaser. They're not going to absorb it. And then that's just the one component of the building industry. Adding all the other ones, then you're looking at a overall 10 to 20% increase in the cost. And someone's got to wear that. And then it just doesn't become viable for the builder to continue. So, it's just a vicious cycle in the end.
I think, we could occupy this podcast and another 15 over the course of the day, chewing through what the potential ramifications are, whether it's a good thing or a bad thing. The bottom line is we don't yet know. There's been some signalling as to what the government's going to do. Look, what I'd like to focus on, and again, with you guys, is really about what this is going to mean for your customers, for borrowers. and how it will create opportunity for the broking market, because this is change, and it will mean that there will still be activity, but there's going to be a lot of, I think for customers, for some customers, they're going to be greatly affected. I believe, again, without sort of knowing what's going to be handed down, there's talk of there being grandfathering around negative gearing. So anything that's been bought prior to this date will be grandfathered. It's going to change the way that I think both. It's going to impact. It doesn't just impact one side of the equation, right? If it impacts investors, that also has an impact on the owner-occupier market, because I think there's probably going to be an impact on housing prices, and we can already see huge cooling in the market. I'm looking at the auction clearance rate. I'm as you're possibly aware, I'm buying another property today. I'm kind of using this. I'm using this as an opportunity.
Well, yeah, I've done the same. It's like, let's get in ASAP. So.
Agents are biting their nails, and I've gone in with using my good friend and very, very highly recognised previous mortgage broker, Ross Lacane, who's now works as buyer's advocate. So Ross is going in helping me buy prior to auction, using this as an advantage. Looking, and I don't want to jinx the deal, but looking at getting a good deal on a property, very much because the agent is very concerned. It's nothing to do with the kind of the changes in taxation. Essentially, it's more a matter of the cooling market and rising interest rates and the potential changes. We've got a very jittery market right now.
Yeah, correct. So we've seen prices cooling down. People are talking about a downturn. I think seen in Melbourne especially, and I'm talking as a whole. Obviously, there are pockets that are doing very well, and actually, those are the pockets where first-home buyers are playing in and investors are playing in. So the market's already cooling. Now, if we remove negative gearing for our investors, our clients, what that does is it does reduce their borrowing capacity quite dramatically. We do have a lot of people coming to us with, I want to buy a home. I know I can't do this. What would be my capacity as an investment? And we know that is generally higher. So they go and buy an investment property. Now, if we get rid of negative gearing for your borrowing capacity, that means you can borrow quite a lot less again. So we've had 3 rate hikes, which, on average would take around 30 grand per hike on the average person.
Yep.
Plus now no negative gearing. So you're going to bring investors back to market that are, I guess, very affordable. I'd say, they were going in the 700K market. That was going to bring it back to 500 or so. And there's not many markets left there.
Well, I actually think the 700K market might even come down a little bit as well, because if you're an investor looking to buy a property now, you're going to be like, all right, interest rates have gone up. I can't do negative gearing. I'm going to have to go at that $700,000 property at maybe 650. I'm going to have to get a higher rental yield to make this deal work for me. So it may be an opportunity as well where investors can start thinking outside the box and going, all right, I might be able to get a deal here, maybe $20,000, $30,000, $50,000 off, get a higher rental yield because you're going to have to bring in more money to cover that cost. So there is opportunities out there. I've just got to think you've got to be a bit smart about it as well, and where you're looking, and just maybe outside the capital cities where a lot of those sort of deals can happen.
With the best intentions of the government, not everyone is going to suddenly turn into a first-time buyer who hasn't already bought property for 2 reasons. Fundamentally, one of them, there's going to be people who still can't afford to get in, even with all the incentives. The second thing is there's people who don't want to own property. They are renting is part of their strategy, and they are quite happy renting. So the challenge, it's just an interesting sort of balance, because in every weekend of sales, a proportion of those sales go to investors. Well, if investors stop buying, it means you're not suddenly going to start having new buyers appearing out of nowhere to purchase. So what you don't want to end up with in this marketplace is properties not selling and either sort of being vacant or just sitting there stagnant, because then you're going to see an erosion of property values. And that, whilst it may be good news if you are looking to get in the market and you see prices down, it's very hard on existing owners,
investors,
equity
would be yeah.
So it's going to be, I think, from a buying and broking perspective, you're going to see, you're absolutely right, affordability or serviceability, should I say, is going to become now complex.
Yep.
You will almost certainly see rentals go up. They just have to. There's no way, unless you start artificially pegging.
I think they would be the biggest, I guess the most affected would be your renter, which are potentially saving to buy.
Yeah.
And that would actually put them...
And then that will then affect their borrowing capacity because they're trying to buy, because, again, their weekly rent has gone up, so their capacity to get higher servicing has been affected.
Yeah, there's a lot... there would be a lot of effects from that, which we can't, I think, see it all. But let's see what's...
Let's take a quick break there. When we come back, I think, look, it's worth dipping in and having a look at what brokers can practically do to really sort of communicate to their customers. Don't go anywhere. Welcome back. It's good to have you with us. Costa, Eva, Alex with you. Broker Daily Uncut. We are considering the yet to be handed down budget, how it's going to impact the market. But I think really primarily for the next section, I want to look at, how brokers can capitalize on this, how they can add value to their customers. Guys, what's going to be your approach with your customers? What's going to be the strategy for Finney?
I think we need to, first of all, to know what's actually going on.
Yeah.
Because it's hard to, we've had so many clients just calling with, what does that mean? And how's that going to affect me? And what about the rate and this and that? And the truth is right now, we don't know.
Yeah.
But based on what we expect, we definitely will have to do a full review on people's borrowing capacity. And it looks like there will be even more difference between what the majors, which are regulated, and the second or third tier lender, which are not as regulated, let's say, can do. So we've seen with trust, the trust changes that we've had since maybe October last year, a real divide there between the type of lenders we can use. I think that's going to deepen even more.
Well, with trust lending, they said they're going to be taxing that differently as well. They're saying minimum 30%, so there's going to be another complexity to the whole situation.
Yeah, so I think there would be a lot of rethinking and re-strategizing of what bank do we use, how do we structure it to make it work. Some actual lenders, third-tier lenders, do not use negative gearing in their calculators, right? They just have different way of checking things. So if it goes, if it doesn't go, it doesn't actually really change anything. So there are options there. It would just be, I guess, for people that are very, I guess, in the box and say, I just want to use major, or I just want the best rate, or I just want to use whatever, to rethink a little bit how it can be done, because it can always be done. There's always a way.
Definitely. And there will be a way regardless of what comes into play.
Yeah. And just
it will be. And you're going to get a reshuffling from lenders. And it will be very interesting to see how they respond, because you'll still have, changes in negative gearing. And I believe, and look, again, we're speculating, but there's sort of talk of there being negative gearing on new builds. And
yeah, and we've seen a lot of them talking about bringing back construction loan, which is very interesting.
Yeah.
Because this took a real step back in the last few years with all those, all the issue in the building industry. And we had like Red Z coming to see us last week.
Yeah, last week.
Mentioning, we might be bringing that back.
Yeah.
Which I think would be very, very clever of them. And there are a few lenders that we've slowly watched coming back with that, or having higher LVR for construction. So I think we'll see investors putting more granny flat and second winning on their land to help with yield and obviously servicing. So it's just going to create new opportunities. It would just be a matter, just to have a look and reassess your options.
Yeah.
And this is the point. It's change, and I think again, brokers are in the absolute prime position to provide leadership, guidance, education to customers, and also it's a really good opportunity though to start getting some solid messaging out, through the various channels that are open to you, because there's going to be high level analysis on sort of a kind of a macroeconomic level of what this is going to mean. But I think there's an opportunity to give guidance to both owner occupiers and investors, and to show sort of how the landscape is going to look moving forward. There's also very sort of a considerable need to go back to a customer base to educate, whether they're owner occs or whether they're investors, and give reassurance, clarity. There's going to be a lot of emotion from media commentators.
Yeah.
I'm serious though.
It's true.
Get a
No,
lot
it's
of
true.
emotion and reaction, and people are unhappy, and there's a lot of politics as well. Going to be there is a lot of you're going to get a lot of sort of reaction to the political decisions. But the bottom line is, whatever policy is handed down is what we've all got to adapt to. So I think it's a huge opportunity for balanced, calm guidance without emotion.
And I think we will, like you mentioned, Alex, I think once it gets handed down, a lot of people will be a bit confused. What does this mean? How does this work? But after about a month or so, people will start adapting. People will start investing again. And then if you look back at this time in 5 years' time, people are going to still be purchasing property. That's just, no one's going to stop.
I think what we need to
because of that.
not forget as well is the tax benefit is always should be anyway, as a bonus on investing.
Yes.
Right? You should not be investing because of negative gearing or...
100%.
So if the bonus is still there, awesome. If it's not, well, that shouldn't be the main
Because
reason
in the end,
anyway.
you're purchasing the property so it can make you money in future years. You're not purchasing the property so forever you can be losing money on it. It doesn't make sense. So, the end goal is basically to make money from it and get rid of your negative gearing. So you might just get that a bit earlier.
Yeah. I think some investors anyway might actually get out of properties altogether and think of different assets. And
we've talked about
diversify,
this, and again, this is a show for investors. But some people will get out. They'll go, you know what, it's too complicated. I will just go and sort of buy yield shares or whatever. But the reality is, any kind of change creates market opportunity for owner occupiers
100%.
and investors. And I feel very strongly that the next 6 to 12 months, because there'll be confusion, because there'll be a readjustment for many people, will be a time of great opportunity. And brokers are perfectly positioned to give advice. Yes, you can give advice around the sort of the side, around the financial side. You can't go advising unless you have the right qualifications as to what to buy and where to buy. But you can certainly give guidance around what the realities are around finance. You can give visibility around.
Yeah, and I think that's what's hard sometimes, Alex, is we can always tell someone, it would work number-wise, because that's what we do, servicing. We can get you the loan this way. Is this the way that's best for you in terms of investing? We can't answer that. It might be, we might be able to tell somebody, buy this property with a granny flat in this new-ish suburb. That will work finance-wise. Is it the best for you? I don't know.
Yeah, no, and in the end,
and that's what's hard sometimes.
Client's the only one that's going to know.
Yeah, and so we're not financial planner, we're not buyer's agent. We can just say, yes, the numbers work, or we can get you finance for that.
You can, but I think it's also, I think you can also have an opinion on the market.
Yeah, we have opinions.
Yeah. If you're in the position for the next 6 to 12 months, will be a good buying opportunity, because there's going to be a lot of people in the market that just don't know what's going on. And from experience, a couple of weeks ago, I was talking to a real estate agent about a property, and he told me a price, and I'm like, mate, there's no chance that's happening. And then I offered, I'm not joking, 40% less. And he goes, let's talk. And I was just like, wow. I wasn't even expecting him to say that. I thought he was going to tell me just to go away. So there is opportunity out there because you're better off taking less and getting it sold than leaving it lingering on the market for 1, 2, 3 months, because you're losing money that way as well. The money's probably working better for you in your pocket than it is just sitting there doing nothing. So it would be a good opportunity to sort of see what's possible, see what sort of deals you can get. And it does begin with brokers, because in the end, we need to get you the finance. So without the finance, there's no property to be purchased. So it begins with us, and we've just got to start looking at the client, again, as we already do, their whole situation and seeing what best fits for them and the way forward and what they can achieve with what they want to achieve.
It's an interesting, outside of your sort of first-time buyer market for owner-occ, it's an interesting situation because, if you're selling a property, it's, you're caught on the flip side that you're going to get a lower price for the property, so it is a really, really, really interesting opportunity or sort of situation. I do think it is a great time, for first home buyers. And I think, depending on what is actually handed down and with the incentives, look, you know what, if you've got some dough, or if you've got a bit of backing from sort of family, what a great time to look to get in the market. But I look around and I see, so that a lot of the properties that I've been purchasing have been in Melbourne recently, sort of 1-bedroom apartments, and they're already very affordable and in some lovely areas. So they're not getting snapped up as things stand at the moment. So interesting to see, guys. We'll take a quick break there. Let's take a look at what's happening in the world of lenders when we come back. Costa, Eva, Alex with you, rambling away about the budget that's not yet been handed down, speculating about how it's going to impact everybody. Let's go on to something a little bit more tangible now. There's one lender in particular that is really making strides forward, Eva. Yep. We've talked about this lender many times.
Yeah, so Macquarie. And look, I'm so glad to read this because I'm a big fan of them, and many brokers are. We found out this week that they grew their book by 28% year on year, and now occupying 7% of the Australian market, I guess.
Yeah, the home loan market, 7%.
Yeah, so it's a huge growth, and it's backed obviously by brokers. We do 95% of their loan.
Of their loans, yep.
It's huge. So I'm glad to see that because they are doing all the right thing by us, by them, I think, and by the clients. They are having also good rates and good customer service. So even down the line. So yeah, I'm glad to see that.
Yeah, no, they're a great bank to deal with. They're a digital first bank, which I like, and I think that's what a lot of customers like as well. They don't have to worry about branches and all that sort of jazz. Everything can be done over the phone or on an app. In 2010, they only occupied 0.2% of the home loan market.
Yeah.
So in 16 years, they've grown to 7%, and their loan book's $181 billion at the moment. So they're fast. They've got great customer service from a brokering side, and they've got really good rates. It's not like people go in there because they've got high rates and they're just quick and all that. They've actually got very, very competitive rates. Majority of the time, they're the cheapest on the market for each client. So they're doing all the right things.
They tick a lot of boxes, yeah.
They're doing everything right, and with that comes all the clients, and they're happy on their end. We're happy on our end. So it's a great marriage.
Are you working for Macquarie there? Are you on the payroll?
No, definitely not. Definitely
no,
not.
It's good when the lender is doing the right thing, because we've had a lot of hits during the year from different banks and lenders. So when one is doing the right thing, I think it's great to mention
they
it.
have taken just to have captured that proportion of the mortgage market is staggering. A huge achievement.
Yeah, just to compare, so they've got 181 billion, not that far from ANZ, that's 194. Well, if you can say that.
Well, and ANZ has been in the business.
Yeah, it's in billion, right? So
it's
still far, but but to compare, for example, with CBA that are around 450 billion, that's still quite far behind. But I guess they are very, very much the fifth
Yeah, I guess you can call them a major bank.
A
now.
bank, yeah.
And I have noticed when people talk about the major banks, they are being included in the conversation now. So it's not just the big four now. I think
It's
it
the
is
big five, yeah.
definitely the big five. So
And I'm glad.
they're doing something
It
right.
was not that long ago that ING was certainly looking like it was in that position. ING was really gaining ground rapidly. 15 years ago or so, Macquarie's Macquarie pulled out the broking market. Oh, I can't remember. Sort of, I don't know. It was 2002, 2003, something like that, and then re-emerged and have built very solidly ever since then.
Just checking there on ChatGPT, ING only has 4.5% of the share market.
Yeah.
So went down.
They look like they were really. There was a period of time where they were really striding forward.
Yeah, they used to be big in their their savings accounts. I remember that was it savings account. If you ever had one, it was with ING. But I guess each bank have their sort of policies and whatnot on what they want to do, and maybe it just wasn't they didn't want to focus as much on mortgages than they do other things. So
I think also Macquarie is well rounded in terms of they don't have policies that are completely take anything, whatever, but they do touch on everything.
Yeah.
So everyone can sort of fit there. They've I think recently changed the self-employed policy to 1 year. I think
you may be right. Yeah.
Which helped a lot to put our self-employed there. Look, it ticks a lot of boxes there for brokers and clients alike. So I'm glad to see their growth, and I hope they do better even next year.
Guys, all we've got time for today. Look, thank you very much for joining the podcast. Always great to have you guys on, get the insights, from people who are qualified to talk about what's happening at the customer level. For everyone else, thanks so much for tuning in. We love having you here. Thank you so much for joining us. We'll catch you next week.
Thank you.
Thank you.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.